Good morning, guys. Welcome to my YouTube channel, Moses Trades. Please subscribe, and also I hope you enjoy the video. This is live trading. By the way, I'm trading gold. I focus on the 5-minute time frame and the 1-minute time frame, and I trade the first 1 hour of London session open. And right now we are left with 1 minute before the London session opens. So I have my areas marked already, but as the market goes forward, as the market unfolds, I will be readjusting and adjusting to market conditions. So let us wait and watch for this moment from here, what will be happening. So what I do is I don't mark the previous days highs and lows, or the previous support, resistance lines and everything. That is not how I do what I'm doing. But what I specifically do, and it is that from the London session open, I'll be watching from this minute. You can see now it is 9 a.m. South African time. I will be reading the price from here going forward, and with that being printed from here going forward, I will be marking my key areas and break off structures and everything that I do. Basically, I will be trying to condense all the information into a singular component that I can then take a decision based off of. Okay, so right now what I'm seeing here is the market is now bearish on the 1 minute time frame, because the structures has just been taken out, which I will mark right now. Okay, what I'm seeing here on a 1 minute time frame is that we have this taken out here. Okay, so we have a bearish market on the 1 minute time frame. And also look at what just happened. That is London session open. It just opened so aggressive, right? That is an aggressive move, and it is a bearish move, by the way. Aggressive sellers today in the morning. And today, but if I'm not mistaken, it is Thursday. It is the 23rd of April. Okay, it is the 23rd of April. So we are bearish on a 1 minute time frame, and also when I check on my 5-minute time frame, I can see that we are bearish also on this side. So what I'm seeing now, it is that both time frames are bearish. They are bearish. So I will be readjusting to the market conditions, as I have already said. And as the market continues, then I will be stacking up my data, as I have already started readjusting. So both time frames are bearish. We have aggressive sellers opening the session today. I trade like this every morning, so please watch all my videos. You can see everything. I go through my mistakes, my wins, my losses, everything. It is there. Nothing is hidden. I am as transparent as I can possibly be. And also I do show the history of this account. I show the history. I show everything I show. And everything that you will see when I'm showing you the history of this account, you can also see on my videos. Everywhere where I posted my 1 hour session, when you combine all those trades, you will see those trades on the history of my account, as I show it live here. And tell me what you are looking at, by the way. What do you trade? Do you trade one pair, more than two, more than five? And what are you basically looking at right now? Maybe you trade Nasdaq, maybe you trade silver, oil, whatever it may be. GBP/USD, Euro/USD, GJ. What do you specifically focus on? Okay, I'm seeing a smaller pullback from the buyers. I can see a pull, and on a 5-minute time frame, it is a rejection. It is a rejection. So for now, there's nothing I can do. Like, I cannot say I am doing this because of what is happening right now. There's nothing that I can do now. Right now, it is just a moment of collecting data, which is the most important part of what I will do. Maybe it will depend. It will depend, maybe in 30 minutes or 40 minutes, somewhere there. But everything that I will do there, it will be based on what I've collected now. It will be based on the information and data that I've just collected from this moment going forward. So I would say this moment here right now, it is also a very important part of what I will be doing in the next couple of minutes. So don't forget to like the video, don't forget to comment in the section below, and also please recommend my videos. Okay, on a 5 minutes time frame, it is a strong rejection. Maybe this thing is now trying to, I don't know, go back a little bit. We will see. That was an aggressive opening from the sellers anyway. So in this case, it will depend. We will see if the sellers are serious. They will have to protect this area here. This 4717.51 area, they will have to protect it to show that they mean business. So we will see. I will mark it because it is the beginning of this aggression. You see this sell impulse. It started on this price here. So I will mark this area because it is that specifically took out this one down here. I think I will also use this out. You can see that this move, this price 4717.51, this was the beginning of the sellers aggressively selling and taking out the structure. So that is why I had it marked. That is why I have it marked like this. So even this one here, because it is a pullback, I will also have it marked to see, because somewhere, not like I'm telling you, we will either take out this area or we will either take out this area. If not, we will trade in between. And if we trade in between, it means now sellers are in control because they are the ones that taken out the structure. So if we trade in between this area until maybe after 10 to 15 minutes, then I will know that okay, on a 1 minute time frame we are bearish, and on a 5 minutes time frame we are bearish anyway also. So it will be two time frames pointing or indicating the same power and strength from the sellers. Yeah, so I will be looking at things like break of structures. I will be looking at things like candlestick confirmations for me to enter a trade. Like the market can come as close as what I've been waiting for. Both time frames can confirm the same thing, and I can get a break of structures. I can get the pullbacks to the fair value gaps. I can get the retrace showing that okay, now this thing is basically looking to be taking this direction. All the information, all the data condensed, and the confluences pointing, navigating to the same direction. But the most key component is just for me to wait for my entry confirmations, which might be depending on if I'm looking for selling or buying according to the information that I've just gathered. So I would have to wait for, maybe if I'm looking for buyers, I'll have to wait for maybe a hammer. I want to see buyers trying to push the price down, and then not buyers, I mean I want to see sellers trying to push the price down and then buyers aggressively pushing it back. And that candlestick, I want to see it having a strong rejection beneath, a tail, and then closing with a green head. And that specifically means sellers came in. Remember, right here I am painting a picture of when I'm looking for a buy entry, right? Everything, let's say everything has confirmed buyers. Right now I'm just looking for an entry. In that specific moment, what I will just be waiting for is I want to see a candle opening, pushing down, sellers trying to push the price down, and then I want to see it coming back aggressively and then closing green with a long rejection beneath. That just show me that okay, sellers were trying to push this price down, but buyers came in aggressively, pushing the market up and then closing in power. That is an indication that okay, whatever sellers were trying to do, they have just been outcompeted by their buyers. So that is one of the entry criteria that I use. And then another one, on the same scenario, we are looking for a buy entry. All the confluences, everything is made. I want to see a red candle sellers trying to push the price down. Closing rate, I want to see candle closing rate, sellers trying to push the price down, but on the next candle, I want to see this next candle, buyers pushing up and then closing overly above this red candle. Do you understand it? So that will specifically mean, okay, sellers came in and closed bearish, but buyers overpowered, or they have oversized the candlestick of sellers, oversized it, they've closed above it. That also shows dominance. But we know this is the market. You can like you can navigate through everything. You can do whatever, collect data as much as you want, what match everything, match the scenarios, do what, and all this nonsense. But at the end of the day, things can just change like so fast. You can confirm by, that's why I always have a stop loss wherever I trade, because as much as I know that, okay, this is a high probability strategy, because remember, when we trade, we work on probabilities, because there's higher probabilities of something happening, it does not mean there's no possibilities of something else happening, so yes, we are moving based on probabilities. Okay, we know that, okay, 70% chances are on our side, but because of that 30% chances, we don't want what we have been building upon be destroyed by the 30% chances. So we want to use a stop loss all the time, and also we want to use proper risk management. That is everything. Look, let me make you an example. Right now you can win all of this week, staking up, making money, winning trades, and then on Monday, next week on Monday, let's say you don't have a stop loss. Now your head is big. Now you are feeling excited, what you are making money, you feel untouchable. On Monday you get a setup, A plus setup, everything matches your conditions, everything, and then you go in, the market pulls back against you, you are in a loss. Remember, now you feel like you are untouchable. You start adding trades. Now you are revenge trading. You are fighting the market. You don't want to accept a loss. So acceptance of a loss is one of the key things that are very important when it comes to trading. Like losing a setup, like that's why you have to have information backed up. Like what you do must be statistically uh, like it should be statistically proven. That's why it is important to back test and forward test, because you are building confidence on what you are doing, you are building trust, so that when you are going through a phase of losses, you know that, okay, another thing, let's say okay, your strategy is a 1:2 risk to reward strategy, or 1:5, 1:4, so why would you panic because of 3 consecutive losses, whereby you are losing 1%, 1%, 1%, while you know overall your strategy wins 1:4, like it has a risk to reward of 1:4, because it means even if you can have 3 consecutive losses, you just need one win to cover all your losses and then be profitable 1%. So that's why it is important to always have a proper risk management, because you know this thing overall it wins. You see, all I just need is to have a stop loss, proper risk management, and follow my processes, follow my steps, follow everything the way I should get it done the same way, nothing else. So a stop loss, you see, a stop loss and a proper risk management, those things some of us had to learn the hard way. Because let me tell you something, when you use a big lot size, number one, if you try to understand, go deeper to why you use the big lot size, it can become from different backgrounds, but the main component, it is that you want to make money now, you want to make money fast. The reasons why you might want to make money fast comes from a lot of different whatsoever, personal what, but the main reason you end up using a big lot size, it is because you need money, or you want money fast, or it is between those lines. So once you start executing a big lot size, guess what will happen? Once that rate goes negative, just small against you, goes negative against you, and you see that minus what, I'm telling you, your emotions will start jumping into your head. And every decision you will make from that minute will be based on emotions. Now you are panicking, now you are all of this. And so my point is that is why it is important to use proper risk management, because when you use a proper risk it means now, okay, now you know I have $100 account, né? And I know I have a strategy that wins 60% of the time. And I know I have a 1:3 risk to reward. So even if I can lose 4 times in a row, I will be losing 1%. And because my strategy is 1:4, I just need one winning trade to cover all my losses. And over time, I know this thing will win more than it loses. So all you just need in that moment, it is a proper risk management to survive, because a market is like the from what I've been learning about the market, from what I've been seeing, from what I've been perceiving from the market, it is just like it is designed, or it moves like nature. It has bad times, it has nice times, it has phases. Sometimes your strategy will work perfectly for the first 4 months, 3 months. Higher risk to reward, higher win rate, higher everything. Eh? And then some phases you will, because remember, this thing is it is affected by the economical things that are happening. When there's a new president in the market, he comes with new things, new regulations, new everything, and the market has to adapt to those things. Ne? Sometimes there is war in the countries. This country fights this one, so it means now the market would move in penny. That is where you will see impulsive moves. Those are the things that we've been seeing in the market since Trump has been in the administration. Okay, gold has been moving impulsively, stocks, everything, until the fight stops. Ne? Now the market, it will also adapt, because remember, financial markets are driven by human psychology. Ne? We are people behind the charts exchanging currencies. Ne? Others are buying, others are selling. Ne? So it means when there is something that is stressing all of us, now everything that we are doing, it will be based on emotions. Ne? Even the market will move in a way that is in a panic. It will push up aggressively or down aggressively. But once everything in the administration has, like, it has calmed down, has cooled down, it means now everything that will be happening, it will happen in a more polite and calm way. So that is why a stop loss is important. Some people lock entries and they keep trading their stop losses with a trade. Ne? So what I'm saying is, you can't just be trying to lock entries and trailing stops just because you saw someone do it. Number one, that is why you should have a backed up data, a systemized strategy that is backed up by your own information on whatever you are trading. Okay, because maybe what you trade likes making pullbacks immediately after breakouts or after retests or after continuations, and maybe you enter based on continuations or retests or whatsoever. So if your approach to the market after a confirmation likes pulling back to your entry, it will be pointless for you to be looking your entries, because you are just gonna get stopped out over and over and over and over, which now will mess up with your psychology. So the best thing you can do is you have to understand what you are doing, how to approach it, when and why. So sometimes, yes, it is good to observe what other people are doing, but the same information that you study or you learn from others, it is what you should, you take it and you try to see how you can tweak it or readjust it according to what you are doing, according to how you do things, and make it work for you. So yes, yeah, a proper risk management is everything, because if you don't use proper risk management, it will take one bad look. We have a good loss and we have a bad loss. Okay, a good loss is a loss whereby everything confirmed your entry, everything confirmed, the setup was complete, everything was there, and then you took an entry, use proper risk management and put your stop loss where it had to be, your take profit, you put it where it had to be, and then the market just came and took you out. That is a good loss. Okay, you lost following your confluences, you followed your system, you followed everything, you followed your playbook, you executed your rules according. So when you get stopped out, that is okay, you move along, because remember, that is why you have to know what you are dealing with. That is why you have to know the statistics behind what you are doing, because you will know that okay, 60% of the time I win. Yes, I just lost a trade now, following everything. I followed everything, I executed according to everything that I should do, and I just got stopped out. You should relax, because you know 60% of the time you will win. Okay, now you relax, you calm down. A bad loss is a loss whereby you took out a loss, you just got stopped out, but you got emotional. Ah man, this thing, everything was confirmed, everything was okay, and blah blah blah, and then now you start doing what? You revenge trade. The market pulls back to your entry, and then you jump in again. It goes back opposite. Now you are in a drawdown. You add positions. It acts like it is moving in your direction. You add positions. It goes deeper into drawdown. You refuse to take a loss. You see that thing? It is a bad loss. Those are conditions you don't want to be in. Okay, what I'm seeing here, enough. What I'm seeing here is that the 5 minutes time frame is bearish, and so is the 1 minute time frame bearish. So what I'm going to do, I'm going to move this like this, and then the 1 minute time frame is bearish, the 5 minutes time frame is bearish also. I think so far I will just have to wait a little bit. I will have to wait a little bit, and I will just be stacking up information. Still, yeah. Anyway, man, tell me what you are looking at now. What are you trading? What are you looking at? What do you see on gold? If you are trading gold, what are you seeing? Are you seeing buyers? Are you seeing sellers? And I think I will readjust this. Yeah, it is a small range. Today it is a small range on gold. Today it is a small range. So okay, I'm seeing a break. I will remove this here, and then I will mark this area. Why? Because it is a fair value gap. Ne? It is a fair value gap. So if I can get, yes, I like the breakout that we are getting here. If I can get a confirmation below, because so far now everything is pointing bearishness on both the 1 minute time frame and the 5 minutes time frame. So what I want to see now, I want to see a pullback, the market pulling back in to cover this favorable gap. Either it will form another favorable gap outside this purple rectangle here, which is my area of interest. So if I can get maybe confirmations outside here, I will take them to try to sell this thing. Which means it will be the similar setup to what I did yesterday. Because yesterday the trade that we took was most similar, like what I'm seeing is trying to happen here. But we never know what will happen. So we just relax and see, and keep staking up that information. So I will also readjust my line on a 5 minute time frame. I will try to make it nice a little bit. I know sometimes it is a little bit annoying to try to put this thing in a nice way. And I can see we already have a fair value gap on a 5 minute time frame. So I will mark it. Maybe it will get taken out sooner than I'm waiting for, but we'll see, because sometimes this thing can act as an imbalance. And also I will adjust my line on a 1 minute time frame, because we just took out a new dip, which is this one. So I will also have it marked. And now we just wait. We wait a little bit. If for this, like on Friday, last week Friday, this week Monday, because on Tuesday I was able to control myself. But what I did last week Friday, okay, on Thursday I had a W, ne? I followed everything the way I was supposed to. Friday, the market just came as close as confirming my entry, and then I ended up taking a trade I was not supposed to take according to my rules, according to my strategy. And I took an L. I cut it quickly, and it was the best decision I did, referring to what the market ended up doing on Friday last week. This week Monday, the same thing happened. The market came close to confirming to giving me an entry. Everything had lined up. And I did the same thing I did on last week Friday. Took that entry, went in when I was supposed to do it, and then I ended up taking a loss again. But on Tuesday, the same thing happened again. The market came as close as giving me an entry. The setup, everything was lining up, but I was able to be like, hey, let me just let me step away. Only to find out for Monday, on Tuesday, it played out anyway, because I was looking for sales, so it sold anyway. But yeah, the goal, like this is what another thing is. Satisfaction should come from knowing that you came in and you followed your rules, and like another thing, being able to sit on your hands, even though when there is nothing for you in the market, being able to sit on your hands, it is an execution by itself. Being able to sit on your hands when your market, when your strategy is not giving you anything to do, it is an execution on its own. It is a win on its own, because you just followed what you had to follow. You followed your rules. So I can see we are having a pullback. So if we just get a confirmation in this, let me mark it and show you what I'm looking for. Since everything is bearish on a 1 minute time frame, 5 minutes time frame, what I want to see now, I like the pullback. I want to see this fair value gap getting filled, and then I want to see an inverted hammer here. Or maybe sometimes it won't happen here, but sometimes it will happen outside here. But in this particular scenario, in this phase, I want to see this market pushing back up here, ne? Giving me maybe an inverted hammer, or I want to see a candlestick closing bullish, and I want to see the next candle oversizing the bullish candle and closing bearish. Then I will take that sell and put my stop loss above here. And as for the 5 minutes time frame, you can see we have a favorable gap that we just filled, which is also a good indication if the market on a 1 minute time frame can just go fill that gap here. You can see we just fill this gap, which is good. It acts as part of the confluences, but already the 1 minute time frame is already dropping. I think it is an entry also, even though it did not go that far. So I will take sales. If it closes longer than this green candle, yeah, I want to see it closing outside, not inside. Okay, I just took sales, and then I will put my stop loss above this orange area here. That is 1.2, and then I will modify. And then I will have my TP here. So this is basically a break and a retest. Yeah, I'm risking 1.2 to, I'm targeting what, 4k. So we'll see how this plays out. Okay, the reason I ended up taking a sell here is because, let us break down this thing on a 1 minute time frame. I think I will focus on the 1 minute time frame for now. Remember, everything is pointing bearishness on a 5 minute time frame. Ne? We have the market structure broken and it is bearish, and then we just fill the favorite gap on a 5 minute time frame. There's exact same thing that is happening on a 1 minute time frame. We just took out this structure here, we are bearish, and then we came back, pulled back into this area. This is a favorite gap, ne? Even though we did not fill this one, but it was a break and a retest of my area of interest, this purple rectangle. We retested this, and then there's a green candle that closed, but the sellers oversized this candle and closed outside beneath my purple rectangle. So that is why I ended up taking this sale. It is still part of my plan, basically. Yeah, so I think this thing can come down here. So from now I will not be marking everything and trying to explain everything as the market is moving. That phase I do it before I take an entry, because I do it to know why I'm taking an entry and why I do it for taking an entry, like condensing an information and staking those confluences. It is for me to take an entry, but after I take an entry I no longer confuse myself with what is happening up and down, what I just leave that to play out. The last time I had an entry so earlier in the day after the London session open, it was last week on Thursday, if I remember well. Yeah, if I get stopped out, ne, that will be my first L of the day. Then I will wait for the second setup if the market gives me, and I will take it. Whether it wins or whether it loses, then I will call it a day. I will come back to more. I will see the market back to more. Yeah, if I have my first win of the day, I call it a day. But if I lost the first trade of the day, then I go for the second one if I get it. Sometimes I will lose my first setup of the day and then I will not get anything else, which is fine. Yes, I just took sales on gold. Tell me what you are looking for. Oh, that is an aggressive push from the seller, from the buyers. Very aggressive. Against my prediction. And they just filled this gap again on a 1 minute time frame. But that candlestick is so big though. Look at it. Very aggressive. Yeah, if it stops me out, man, and comes back in here and fills this gap, it will still be a confirmation. If the structure will still be bearish, of which by the way it looks bearish anyway, even if this thing can pull back inside into this favored gap and fills it and confirms, it will still be under bearish conditions, so I will still take it. Yeah, I'm -8 now. Yeah, that is a stop loss. By the look of things, this is a stop loss. Okay, we just took an L of the day, took an L today, and then I will adjust. Ne? We won't cry about an L. We adjust and we see what the market is giving us. So let us see. And then I will go back to my 5-minute time frame. Everything is still bearish even on a 5-minute time frame. And then I will remove this arrow. Unless this area is taken out, I think I should remove this. Yeah, and put it here. You see this? Unless it gets taken out by this bias, then it will mean now we are under bullish conditions, because it matches with what is happening on the 5-minute time frame. So if they both get taken out, now it means buyers are in control. So I will mark it. I will just do, let me remove this on the 5-minute time frame and then get this area marked. Oh wait, okay, I'm seeing an inverted hammer on the 1-minute time frame. It came back. If that candle closed as an inverted hammer and closed bearish, I was taking this sell because we are still bearish on both time frames. You see the way it is. If it closes bearish, I will take this sell, which will be my second setup of the day. Win or loss, I will call it a day. That's it. I'm taking a sell. This is my last trade of the day, so I'll have my stop loss there. Yeah, you see, that is an inverted hammer. Beautiful setup. So whether it wins or it loses, I will accept my loss. I will accept that this is an LD. So I'm risking $9, $900, still targeting the same thing. Just that now it has just confirmed that the discount. At first my TP was here. So that is what 1:5. So if I win this particular trade, I will recover all the loss I've just made today and make over. That is the best case scenario anyway. If it loses, then it is fine, because I know overall I get more wins than my losses, and I know my risk to reward is always 1:2 or more. So I know I will recover anyway. It will take me maybe 1 or 2 setups to make back. Even if I can get one win, maybe let's say I lose both my setups today, and then tomorrow I get one win, 1:3. I will recover on my all my losses and make up my and make some profit. So that is why I was saying you have to know your like you have to be familiar with your strategy. Whether you like it or not, losses are part of the game. You just have to know how to control yourself. And for you to control yourself, that controlling will come from using proper risk management and knowing the statistics behind what you are doing. As long as you still have some questions about your strategy, as long as you're still doubting certain things, then you will keep losing money one way and you keep making mistakes one way. That I can promise you. Yeah, this is my second trade of the day so far. Yeah, we will see how it plays out. Yeah, this was my first L so far. I am down on this account because it is a 100k competition account, ne? Remember guys, this is a competition account, ne? I am down 600 bucks so far. It is a competition account. It ends now when this month ends. It will end and then I will start a new one next month. That I will be trading live on YouTube here. I will trade it live every day. My main goal here, it is not to paint a perfect picture, ne? I'm not here to make things look nice in the eyes of people and everything. The main reason I'll be trading this thing live is because I want to if I lose that competition, I want to lose it in front of anyone. And if I win it, I want to win it in front of anyone. If I lose a trade every day, I want to lose it in front of anyone. And if I win it, I want to win in front of those who were there when they saw me lose. So my main goal is not to paint a sexy picture. I'm not here to make things look nice. That's why I do not hide my losses or I don't hide my weaknesses. Yes, I do have my weaknesses. You have seen them so far. So when you follow me, when you follow, if you follow what you know, yeah, we will see. We will see if this thing will sell or what. Tomorrow is the last day anyway. Tomorrow is Friday. We might not get a setup, we might get one. Yeah, I think so far I will just stop talking too much. Ne? We will just let the market do its thing. Yeah, I can say we are left with 15 minutes before my time window is up. By the way, I only traded the first 1 hour of the London session open. Anything else after that time window, I'm no longer interested in it. That's why I'm saying this is my last setup of the day. And I don't like chasing the market. When I am wrong, I want to be wrong quickly for the day. When I'm right, I want to be right quickly for the day. I don't like chasing the market. Like the results has never been good when it comes to chasing. You can chase the market and you can chase it the whole day. By the time you get tired, your account will be 0, 0, 0, 0. So that is why limitations are good when it comes to trading. Hey, buyers are fighting. I think this one will lose also. This will be my second loss of the day, the way it seems. You saw that aggressive push to the upside. Yes, that is minus $7 now. $700. So this, I think this will be a stop loss also, which is fine. Then we will see the market tomorrow. Yeah, that is my stop loss there. The stop loss just got hit. So far for the day, I'm down 2 grand. You can see both of these. So I will come back tomorrow and see. You see, with these losses now, if tomorrow I get a W, it will recover all my losses. But you see, I lost two setups. But tomorrow, if I just win one trade, 1:3, 1:4, I will be up for the day. Yeah, I can see that buyers are fighting. They are not letting this thing like go bearish. Yeah, anyway, thanks for tuning in, guys. Like the video, please comment, leave your ideas, leave your opinions. I will really be interested to replying to those. And yeah, man, subscribe to the YouTube channel. Thanks for watching, man. My time is up now. 15 minutes is left, but there's nothing I can do in this 15 minutes because already I've lost both of my setups for the day. So unless if I can do it for someone else who's watching, I can just continue breaking this thing down for the rest of this 15 minutes, which will be what I'm seeing from now. Let us remove this. What I'm seeing now here, things have changed. Now the market is bullish, you can see here, and I know it is bullish on a 5-minute time frame also. So I'll mark this area like this. Yeah. The 1-minute time frame is bullish and the 5 minutes time frame is bullish. So what is happening here? This, we have a very, very, very beautiful area here. So if this market can pull back into this area, this fair value gap here, and does not break this low, I don't want to say it breaking this low. If it pulls back, confirms here, this thing can be an aggressive buy to push to the upside, because already I can see that buyers are fighting. Let us open the 5 minutes time frame so that I can show you what I'm talking about. You can see here, look, the 5 minutes time frame is also bullish. It is also bullish, you can see. One thing that has been difficult for me so far was not taking trades. Eating a loss is much easier for me than not having to take a trade. So the 5 minutes time frame is it is bullish also. So I will, for now, I'll focus on the 1 minute time frame. So if it can just pull back into this area, if it pulls back here and confirms, then this can be a buy. But I will no longer be taking trades for the day. I am done. I have lost twice so far, 2 setups down. You can see here, you can see the balance, right? So during the weekend, I'll make a recap of, I'll do the recap of my trades for this week. Okay, maybe some use another thing. There's many areas to look for. Even if it does not come down here, it is fine. Now it has left this area of significance here, and then I will readjust this to this level. Again, I don't want to see it when it pulls back. We can buy this thing here if someone is interested in taking a trade. If this thing pulls back here, fills this gap, we just don't want to see it coming below this red candle, because now it will mean the 1 minute time frame is bearish. So we want to see it maintaining its bullishness. If it pulls back, gives a confirmation while it is still bullish, and then look to buy this. Yeah, only 10 minutes is left. Yeah, by the way, that last trade, I thought actually both of these setups that I lost today, I thought they were going to be very aggressive selling to the downside, but then the market is the market. It did what it wants to do. Look at how aggressive these buyers are, man. Look at these candles, the way they are so big. Very big candles. Follow what you preach. Preaching, like talking is easy. Can you do what you are saying? They say talk is cheap. Actions speak louder than words. So for the past couple of days, my talk has been cheap. My talk has been cheap, but not from yesterday going forward. Yeah, my talk is backed up by what I say. When I say I'm done, I'm done. When I'm saying there's no confirmations, I'm not taking it. Yeah, you can see that pullback. I like it. But what we want to see this candle. Like, if it will be a bad entry if this candle closes above this one. You can't buy here and put your stop loss down here. It will be a big stop loss unless if it oversize this sell candle, unless there is a smaller yana pullback so that you can get a proper entry, hoping for a rejection. That will be an aggressive entry, by the way. Yeah, only 7 minutes is left now for me to close my charts. So if by combining both of my losses, now we can say today I was risking, because this is 900, now we can say today I just risked, if from this 1.2, if we take 100 from this 2 and add here, it is 1k 100 on the one that is left on top. It will be 1k 100, and this one below will be 1k. So we can say I just risked 1.50, which is fine, because usually I just try to keep my losses under, I just try to keep my stop losses with my lot size. It is another story to want to lose a certain amount of money, ne? And using a bigger lot size to the point whereby you can't put your stop loss where it is supposed to be. That is another, it is another story. So number one, your lot size has to be, it has to be so low that you can put your stop loss where it has to be, so that your stop loss cannot be based on emotions, but it should be where it's supposed to be. And after you see, okay, I will lose this much, then you can decide to add one or two entries so that you can lose your total amount of the day. But it is another thing to put a big lot size and then saying, I only want to lose 1,000. You see this candle, if it, okay, let me see. Yeah, it has to close above this red candle. It is another thing to put a big lot size and say, I only want to lose $100. And then when you drag your stop loss by negative 5 pips, with 5 pips you are already minus 100, then you are going to put your stop loss where it is not supposed to be. Let's say maybe in this case, according to your setup, your stop loss has to be at 30 pips, ne, beneath or above your prediction. But because you have placed a big lot size, your stop loss is going to be based on your emotions. You are going to put it where it is not supposed to be. So it is very important to first fix your lot size, minimize the lot size as much as possible, then drag your stop loss. Don't focus on the numbers. When you drag your stop loss, you don't want to be paying attention to the numbers, because your stop loss is going to be emotionally based. That is one thing you don't want to do. So number one, when you drag your stop loss, you drag it while you are just watching on the price. You are watching on the price, dragging stop loss, and observing your setup, putting the stop loss where it is supposed to be. Then let's say now you see, okay, this is minus 10, and overall each setup you want to lose $100. You can see, okay, this is minus 10. Then now what you can do is, let's say your lot size is 0.10, ne? You can be like, okay, my stop loss is at 50 points. I'm losing, I just entered 0.10 lot size, and the total is minus 10. I want to lose $100. So now you can use you can add numbers and say, okay, let me close this trade now, because it is still minus maybe 0.50, it is minus cents. Let me just now make, if you multiply that 0.10 by 10, it will be 1.00. Then it can be close to minus 100, ne? So now then you can put the lot size you want to do. Maybe instead of putting 1.00, you can just say 0.90 and then execute another trade. Drag your stop loss, put it where it's supposed to be. Then it will say minus 995, minus 95, minus whatever, $100. So that is the best way to put a stop loss. You don't want to put a big lot size, drag your stop loss, and then be paying attention to the numbers, looking the number minus 100, minus 200. You are just gonna, you are going to place a stop loss where the market will just keep on taking you over and over and over and over. Yeah, right now I don't see this thing confirming an entry. What time is it? 2 minutes left before my time window is up. Only 2 minutes left. So there's no entry now, because you can see how big this red candle is. It is too big. Oh, I think this is an entry, because this candle just came beneath this big red candle, and then there was this so this hammer here, this is an entry, this is a buy. If anyone is looking for an entry, this is a buy position. On that green hammer, it is a buy, this thing, but I can't be part of it. Already I've lost both of my setups, and I think it will do well, because we all saw this aggressive push from the buyers. So buying this thing, I think it will come. Let me see. Okay, I will pull up my 5 minutes time frame and try to see. Yeah, I think it will come up here. I think it will come up here. So what I can do for entertainment, is I can minimize my lot size so bad, but so far this thing has already pushed up so too much. I was gonna use the smallest lot size possible and then take an entry and then just watch what will happen. But already it is too far. Unless if I can just minimize my lot size again to 0.10 and then buy it. Yeah, it is a late entry by the way. It is minus 50. Yeah, it's fine. So this entry is just for entertainment. This trade, it is not for me trying to do anything. It is just for entertainment. So I'll just put my TP here, which will be 150 bucks. So my stop loss is 50 to make 150. So that is 1:3. It is a 1:3. I think I will focus on my 5 minutes time frame because it seems to give more information than the 1 minute time frame. Yeah, so far it is up 40. It is a 1:3. Yeah, my time window is up now. No more trading. I think I will just put my stop loss here. I just want to close my charts now. I'm not interested on whatever. So I'll just put my stop loss that close. I don't want to see this candle flipping and becoming red at all. I want to see it pushing to the upside. If it does not do that, I want to be wrong quickly. I want to be wrong now. So fast. You can see that aggression pushed to the upside. That was a good impulsive move. So why did it come back this far? I don't like the fact that it came back this far. No, I don't. Even worse, I think I'll put my stop loss below this rejection. I don't want to see the market taking out that rejection. I just want to see this thing going up. If it doesn't, then I'm out, because right now that red candle has filled this fair value gap here. You see, after we had this aggressive buying candle to the upside, it left a fair value gap here. You see this big candle, it closed here, so there was a big fair value gap, and then this red candle closed here, still left a fair value gap in between, and then this previous red candle filled this fair value gap, and then there was this hammer. So why would it come back here? It shouldn't. I don't want to see it. If it does it, then I'm not interested about the outcomes. Whether it will win after it taking me out, I'm no longer interested about its outcomes. I just want to be run now and leave my chart and close my charts and come back tomorrow. Ingabs as yeah, that was minus 8 bucks. So yeah, I'm out. I'm out. Thanks for tuning in. Please, man, don't forget to like the video, subscribe, leave your opinions, leave your comments, anything. I will be replying to those comments active. Tell me what you think I could have done better. Tell me what you have done. Tell me what you were looking for, or what you are still, or what you'll be looking for the whole day. Or do you take multiple? Do you trade multiple set pairs? Do you trade more than 5 times in a day on one pair, or maybe anything? Just tell me what you do. Tell me what you think I could have done better. Anything you would like to say, just drop it in the comment section, and don't forget to like the video, don't forget to subscribe. Dango.